So you've hit your longest winning streak, you have one of the best trades that just closed, things are looking good with your trading, everything you touch seems to turn into gold. Now, it's the time to give your boss the finger and start trading full-time. I'm sure at any point of your trading, you have thought about that before. But look, that's not necessarily the right way. Just because you make good sandwiches and your friends like your cooking, doesn't mean you can open a restaurant. So in this video, I'm gonna answer the age-old question of when's the right time to trade full-time. The four main topics we'll be covering in this video is going to be knowing the metrics, optimization, monthly and annual goals, and building a financial cushion. So trading is like any other business. You need to know all the ins and outs of the cost, understanding your investment, understanding the time to generate profits, the time to generate revenues, so on and so forth. So the first step in understanding where you're standing between trading part-time to full-time is knowing your numbers, your trading performance metrics. The first key metric is your win percentage. What's your win percentage looking like? Now, when I'm talking about win percentage, I'm talking about over the long run. So 3 to 6 months period, over at least 50 to 60 trades. What's your winning percentage looking like? It could be 50%, it could be 60%, 70%. Some really good professional traders, they might just have a win rate of 30%. And they can still make a good living out of it. I'll show you how in just a sec. The second metric to look at is your trade frequency. How long do each trade come about for you? Do you execute a trade once a day, 2 times a day, 3 times a day? Or do you execute a trade once a week, once a month, right? You're leaning more towards the investment side now, because if you're just executing a trade once a month, 2 times a month, that might not be feasible, okay? So that's the second number you want to track. What's your trade frequency? The third number, Sharpe ratio. Okay, Sharpe ratio is a fancy way to track your average risk to reward. The way to get this number is just dividing your average winner by your average loser. That's your Sharpe ratio. So when we look at the Sharpe ratio, you want to make sure that it's always above 1. You're expecting that your winning trade would generally outweigh your losing trade. Okay, if it's below 1, in the long run, it's not gonna look good. Because again, your average winning trades are much smaller than your average losing trade. That means over the long run, you're gonna be losing money. So if you're facing that problem, I would really highly recommend making sure you have your strategy down and executing right, making sure you're trading the right way. If you want any tips or tricks on that, I suggest checking out the courses from Urban Forex. That's an award-winning course where you can really understand price action and understand how to apply it in the market the right way. Okay, but anyway, if your Sharpe ratio is above 1, things are looking better. Let's look at the next metric, risk per trade. Okay, when we talk about risk per trade, it's generally going to be 2 to 5% of your capital. Okay, this is something that I really advise not changing, because if you're risking too much on one single trade, you're gonna go down a slippery slope of blowing up an account. Unless you're a professional trader and you know exactly what you're doing. Okay, otherwise the risk per trade is always gonna be 2 to 5% of your capital. Okay, so if you don't already know the numbers, make sure that after this video, go back to your trades and look at all of these numbers. Okay, once you have them, let's see what are the tweaks that we can make to drastically change the overall outcome to help you reach the goal of trading full-time. Moving on to the next piece, optimization. All right, so let's tie all of these numbers together. Okay, the metrics we were talking about. So let's say our trade frequency is 2 trades per day. And the win rate that we have is 50%. And we have a Sharpe ratio of 1.5 with a risk amount of $200. So with those numbers, you have 10 trades. And let's say we look at this over 1 week. Okay, every trading day, you take 2 trades, 5 days a week, you have 10 trades. And then because we have a 50% win-loss ratio, it's gonna be 5 winning trades, 5 losing trades. And based on the 5 losing trades, if we multiply that by our risk amount, that's gonna be $1,000, okay? And with the 5 winning trade with a 1.5R Sharpe ratio, if we multiply that by the risk capital, then we have 1.5K, okay? If we mix these two numbers together, at the end of the week, you will be up $500. Now, multiply that by 4 weeks, you will have $2,000 per month. Now, $2,000 per month does not sound a lot, right? You are better off working a 9 to 5 than day trading to make $2,000. However, looking at the table that we have made before, you just need to make some slight tweaks to have a drastically different result. The first thing that you can look into is increasing your risk amount. Now, I'm not talking about increasing the percentage of your capital. I'm talking about potentially saving up a little bit more money, inject that into your trading capital, and then start trading larger with the same percentage, which is around 2 to 5%. That's one option. The second option, now let's say if we increase the risk amount to 500 per trade, okay? With that, the numbers are gonna change. Instead of positive 1,500 at the end of the week, you'll have 3,750, but the same goes for your losing trade. Instead of negative 1,000, you would have negative 2,500. But the end result would be a higher net profit for the end of the week, putting you at 1,250. What my personal suggestion would be looking at your Sharpe ratio. Making sure that when you do lose on trades, you lose much smaller. When you win on trade, you win much bigger. That means having a good, solid understanding of your trading strategy, knowing when to get out sooner, and when you have a winning trade, knowing when to get out later, holding on to your profits. So if we look at the Sharpe ratio that we have here, which is at 1.5 initially, if we change that to 2.5, the result will look a lot better. Now, with a Sharpe ratio of 2.5 and with the risk capital of 500, this is gonna be the result, okay? Everything still remains the same, but after 10 trades, your winning trades will end up with 6,250, but because your risk is always the same, your risk remains at 2,500. And the net of it is going to be 3,750. If we multiply that by 4 weeks, you're gonna have 15,000. Sounds good, right? So these are the things that you can tweak to your trading to maximize on your performance. So the other thing that you can also tweak would be the frequency that you trade, because the more you trade, the faster you'll be able to see your account growing. And the final thing would be increasing your winning percentage. All of this comes down to understanding your strategy well. So again, if you haven't done so already, after this video, make sure to look at your account, look at your past trading performance and see what are your numbers. Now, with those numbers, we move on to the third step, comparing it to your monthly or annual goals. To really be able to give your boss the finger and say, I quit and start trading full time, you want to make sure your monthly trading performance matches your monthly income. That's the very bare minimum. The worst thing a trader can do is to take a pay cut and then just trade full time, because this is going to lead to a lot of frustration. The very first thing that you're gonna encounter is your monthly trading revenue is unable to cover your trading cost. And let's say if it's unable to cover your trading cost, you have to cut back on things, you cut back on food, transportations, entertainment, all sorts of stuff. That's not a sacrifice that you need to take. You can take them, but you don't need to take just because you want to trade full time. It's better off that you work on your trading performance until you can match your monthly or annual salary it's only then you want to consider trading full-time. The advice that we usually give is you only want to move on to trading full-time when you can comfortably pay for your living expenses just by trading alone. Okay, let's move on to the final piece, the financial cushion. Let's say your numbers are good. Let's say your return from your trading from the last 3 months, I would really advise at least 3 to 6 months, shows you that your trading revenue can match your salary income and can cover your cost of living. What's next? The next thing is creating a financial cushion. Because one thing that most full-time traders don't think about when they first get into full-time trading is the mindset and psychology behind full-time trading. Because again, when you're trading full-time, you're actually starting your own business. So when you first get into full-time trading, you will have a lot of stress, a lot of pressure to perform, and sometimes even anxiety. And those 3 things are going to impact your trading. Because now you have no backup. You are either gonna sink or swim. So you wanna make sure you are at a very comfortable state before trading full-time. What that means, at least for most people, is creating a financial cushion. Like most businesses, business owner, they start off with 3 to 6 months, sometimes even a couple of years of financial cushion. That means enough savings in their pockets for rainy days. What happens if there is a month where the market is just not looking good at all? So even if you have a very good metric, it's not gonna matter because the market is just not giving you the opportunity. When that day comes, and that day will come, you wanna make sure you are able to continue living comfortably with the financial cushion you have. So full-time trading isn't just about having the best metrics. Okay, it's also about testing your psychology, having the mental stamina, looking at charts all day, every single day, avoiding burnt out, and having emotional resilience. Can you handle losing streaks? Because that's going to happen. There is a lot of other elements that comes into play when it comes to full-time trading. So before you get to that point, make sure your actual trading strategy, your actual trading approach is good. Make sure you're doing it well on, doesn't matter if it's on a demo account or on a small live account. As long as you can master your craft, full-time trading is going to be an opportunity for you sooner or later. So when's the best time to give your boss the middle finger? Well, your results are gonna tell you, okay? Just look at your metrics, look at your performance over the last 6 months just to see where you are at. If you find that you need improvement on your strategy, I really encourage you checking out the courses at urbanforex.com. Naveen, the founder of Urban Forex, has built several courses where it's very easy to digest and it's gonna help you tremendously by understanding price action and how to apply it to the markets and build consistent, profitable results. So I hope you enjoyed this video. I hope I gave you a good insight of the steps to reach full-time trading. If you like what you have watched, make sure to hit the like button, hit the subscribe button, turn on the notification bell if you haven't already, and I'll see you on the next one. Cheers. Bye for now.